Seth Freeman, Senior Managing Director of GlassRatner, with us in the studios to talk about his thoughts on the globe. Seth, great having you. Thank you so much for joining in.
Thank
welcome
you.
to India.
Thank you very much. It's great to be here in person.
Yeah, it's great to have you here, and it's great to have you in India because, frankly, the tariff issues notwithstanding in terms of growth, I think India is looking gangbusters. But before we get there, let's just first talk about what you make of all that's happening. I mean, if people thought that there would be some reconciliation, and yes, there has been an outward reconciliation, but the commentary from both sides at the WEF, for example, US versus European leaders, has been nothing short of stark. I mean, is this a recipe for some issues in the risk assets, or do you believe that they are behind us now?
Oh, no, I think there's a lot more to come out about this supposed Greenland deal, and because we don't know any details. It's not particularly clear that the U.S. has won anything that we already had under some long-standing treaties. The pressure that Trump put on EU leaders was very high and may have really kind of rocked the world order a little bit.
Yeah. And but that's the question really then. 2025, the markets have grappled with a lot of these tariff uncertainties, and yet you've largely seen global equities, select pockets, etc., follow the AI trade and not necessarily just where the tariffs went. What does 2026 has in store, therefore?
Well, there's some concern in the AI sector about the circular transactions with the AI companies buying big interests, investing in the hardware companies and so forth, so that the AI companies are raising a lot of capital and not directly using that capital in the AI company, but investing it. And that creates a little bit of a pyramid scheme in one sense.
It's interesting that you say that, because there has been a little bit of a dithering at some points over the course of the last 7 months, but eventually everybody piles back into the AI trade. That's been happening so far, and we haven't seen an unwinding of that take place yet in a big fashion. And one would assume that you would have to wait for something like that to give for capital flows to once again go to the non-AI plays. Is that what has to happen?
Well, I don't think everything's going to AI, but there's a lot of excitement. It's rolling out. And it's expected to have just tremendous long-term impacts. So I think that's what investors are thinking about. But I'm old enough, I remember Web 1.0, and there was a pretty substantial crash at that point. And maybe there's some risk there, although portfolio managers are certainly watching their numbers, I think, much more closely.
Okay. You've now, I don't know how long you've been in India. I'm wondering whether you've interacted with a few of the businesses here, whether you're looking very closely at the businesses here. So from the outside in, now that you're on the ground here, what are you seeing that you might take back to the folks back in the US to talk about potential opportunities here?
Well, every time I come to India, I'm amazed at the wealth creation that's gone on and the number of millionaires. I think there's 920,000 millionaires and 200 billionaires. And I've been involved with India since 2003. And things have changed dramatically here. And there's obviously still a lot of room. I'm in India to attend a major insolvency and restructuring related event in Hyderabad, the Insolvency Law Academy. And there's a lot of interest in being able to accelerate taking distressed companies and kind of recycling those and having growth come out of distressed companies, not just pure liquidations. And so I think that's a very exciting source of capital. And I'm always excited to see the growth in sort of international, global orientation of Indian managers.
Okay. Seth, my question coming to you is, with what's happening in India, I mean, Alex just touched upon the point that FIs are probably still not coming back. DII is extremely strong when it comes to the growth story for the Indian markets. If you have to look at India from an investment perspective from here on, where valuations stand, where the third quarter numbers have panned out, everyone's of the opinion that the third quarter has been better than what the street was estimating. Do you think the structure now will make FIs come back to India and taking even the way the Indian rupee is panning out?
I'm glad you mentioned the rupee because the rupee is obviously depreciated a lot.
Yeah.
The dollar's depreciating this week. One of the risks for foreign investors is this continuing rupee depreciation. I remember, I think it was 34 to the dollar when I first came to India. And so that really impairs returns when you're looking at, dollar, converting it back to dollars. So there is that doesn't change, though, the Indian growth story. So I think it really, we're in though, a more risk-on mode, I think, compared to global securities in terms of emerging markets. So India is going to get its share. There's still tremendous need for infrastructure investment. And that's a long-term compared to moving money in and out of securities. And so I do think that investors, the smart long-term investors, are looking at infra opportunities.
Okay, so maybe FDI, maybe specific asset-based backing, equity markets. I think it remains to be seen. I think that seems to be the word from Seth Freeman. But lovely talking to you today. Thank you so much for being with us in our studios.
Thank you.
And we wish you have a great trip in India. We hope you enjoy a lot that this country has to offer relative to whenever you would have come last.
Great. Thank you very much. It's a pleasure to be here.
Always a pleasure. In fact, you are hoping you're going with a lot of investment ideas as well from India. So let's see how it pans out.
Okay. Thank you.